Good afternoon, and the second last presentation, but I think this will be quite a presentation for you because Noosa has got the first presentation on our latest release that came out this morning, which is we've increased our resource, JORC compliant resource, from 1 million ounces to 1.71 million ounces. That's an increase of 70%. And within that, we have an inferred resource which comprises of a very high grade component of almost 1.5 million ounces at over 10 grams per tonne. The remaining 240,000 ounces gives us the optionality on open pit bulk mining methods. So what we have now is a great resource, high grade resource, and a bulk mining resource, which improves the economics of the project quite considerably. This opening slide I've got here for you shows you the camp as it is now. So there's a 24-person camp. They're the core stacks in the background. In the foreground is the core shed, the generators. So there's hydroelectric power that goes through there in summer. Of course, this is a summer shot. In winter, this is completely covered in snow, but it can be mined all year round. It is a fabulous place to do business. There's the disclaimer. Just in way of corporate summary, here it is in a nutshell. 3 takeaways right here. Board management with hard dollars own 27% of this company. So we're well aligned with our current shareholders. The second takeaway, which I'm very proud about, is we've been supported by Australian and global institutions. A quarter of our register is comprised of those institutions. And our top 20 shareholders own 63% of the market capitalisation of this company. One of the things I want you to think about as you're going through this presentation is the quality of the people, the quality of the asset, the upside, and more importantly, where we actually operate, but also the valuation here. So what you can see here is we have a market cap of 180 million, we've got cash in the bank as of the 31st of March of $27 million. And so on a per ounce basis, we're valued at just over $100 an ounce. But not all ounces, not all grade is equal. And this high grade project and asset is really, really undervalued as we sit here today. The next thing is all of this means nothing without the people. And I'm proud to say this is a group that have all worked together for a very long time and have track records all in their own rights. I'm the founding chairman of Bellevue Gold, which has gone on to become almost $1 billion company. We started that some 5 or 6 years ago as a $2 million company. I moved on in September 2019 to pursue the opportunities that we saw in North America. I'm lucky to have Steve Parsons and Mike Naylor on my board. They're both executive directors at Bellevue Gold, and we've worked well together. Sage advice from both of those gentlemen helped me tremendously. And then we have Marcus Harden, who is our chief geologist. He's actually moved to Canada, such is his desire to make this project work. And then finally, on the 1st of February this year, we got Darren Cook, who came to us from Northern Star. This is a particularly pleasing addition to the family, if you like, in the sense that he's given us a laser-like focus on how we extract maximum value out of this project and how we can take this project from the 1 million we had to 1.7 to over 2 million ounces and beyond over the coming little while. So we're really pleased to have him on board. What you've got to remember when you're looking at this company is our focus. We've got a very strong focus, and that focus is in gold. We'll take all of the other upside, silver and copper, but primarily gold. We want to stay in Canada. It's a tier 1 jurisdiction. People talk about tier 1 jurisdiction. Let me show you in practical terms what that really means. Now, we've found it easy to get our 4 rigs. We're going to a 5th and 6th rig. The rigs, the crew on those rigs are very experienced and now know how to operate in this environment. We have a great relationship with our First Nation group, the Mishigogaman, and our assay turnaround times are 3 weeks compared to Western Australia, Europe, North America, where they can blow out to 12 weeks. So we're very fortunate on a practical level. The geology, it's a known mineralised district. It's a camp scale that we're looking for. And when I talk about scale, I'm talking about over 1 million ounce discoveries with 100,000 ounce production per annum. Now, we've already shot past that. We're heading closer to 2 million ounces. And then we'll infill drill after we get to that. But this high-grade deposit is exactly what we're after. Also, obviously, the environment, our people, and safety are paramount to us, and we have a first-rate record in that area. Now, obviously, we're looking at Pickle Crow, and I want the world to know that that's our major focus. But the opportunities that are presenting themselves to us because of our experience and background are something that we won't ignore. Nothing on the table today, but something to think about in the future. Here are the highlights. So this is what, I'm not going to go through each one of these, but I want you to have a look at this in detail. It's posted on our website, but this is what we've done since we started drilling in late March 2020. Near 15 months, we've got to 1.7 million ounces. And we will give you these sorts of news flow in the next 12 months. That's why you keep your eye on this stock. So the asset, in summary, so we're really short, a hop, skip and a jump from Toronto. It's a plane flight to Thunder Bay. From Thunder Bay, daily flights to Pickle Lake, and then it's a 10-minute drive on paved highway to site. Great access. That's primarily why we bought this asset. We've got access 365 days a year. Historically, what's so important is between 1935 and 1966, it produced a stunning 1.5 million ounces to 16 grams per tonne. It stopped in 1966, not due to a lack of mineralisation, but more importantly, gold had dropped to $35 an ounce. Well, you know what it is an ounce now, and you can see why we picked this up and reinvigorated this stellar asset. Our resource at the moment, 6.6 million tonnes, a combined resource of 1.7 million ounces at 8.1 grams per tonne. Underground infrastructure is at 38 kilometres of lateral underground development. In today's dollars, that's $200 to $250 million worth of assets. It is flooded. It's not too much work to get it out and out. We've got 3 main shafts we can work. We've got surface infrastructure, which I mentioned to you before, and grid-connected hydropower. Here we are. So this is our geological setting. We're in North America. We're in the Laurentia Superior Craton, the Uchi subprovince, moving to Pickle Lake Greenstone Belt, and then obviously around Pickle Crow and the Central Patricia mines. What's really important, check out our neighbours. Red Lake Evolution, Musselwhite Newmont, Springpole First Mining, our partners, Madsen Pure Gold, the Dixie Project, which is Great Bear, and the West Red Lake District. All of those are multi-million ounce deposits. And here you can see, this is it in more detail. So you can see exactly where Pickle Crow is located in yellow there. You can see our neighbours and the production that they've had over a substantial amount of years. In that area alone, there's over 40 million ounces of high-grade gold gotten. It's a tremendously prolific area, and we have 500 square kilometres of that area. To date, we've only looked at 2% of that area. It is highly prolific, and I'll show you why. Here it is. Here's our 500 square kilometres. This deposit is controlled by the Archean greenstone, hosted by these mesothermal orogenic gold deposits. And the host rocks are mafic sequence. So you know all those areas, which is West Australian-based sort of areas, which are very familiar to Australian investors. It's really, really interesting area. And you can see where we are is the mafic intrusion area, the felsic, and the mafic into the volcanics. Very interesting area, totally underexplored. And here it is. This is the mineralisation. This is the prolific underexplored camp that I talked about before with multiple mineralisation styles. So the 1.47 million ounces at above 10 grams per tonne. That's that vein-hosted gold, which is the mainstay of historic production, which will continue. And then we've got the alteration-hosted gold, which is giving us 240,000 ounces at 3.7 grams per tonne. Now, this gives us the optionality, which is so important for everyone to understand, to bulk mine and potentially open pit. This is very close to surface, and this changes the economics of this company outstandingly. So these are work plan. You can see what we've done, where we're up to. Again, what we're doing now is we've done our 45,000 metre drill campaign. We've discovered new lodes, extended those veins that we knew had mineralisation in them. We've infill drilled newly discovered extended lodes and commenced testing an early stage conceptual targets. We've delivered this resource update as of 30 of June. So all of that is completed, resulting in 1.7 million ounces at 8.1 grams per tonne. This is a world-class deposit. Here it is continued. So what we're looking at, this mid-year resource, which I've banged on about, but this has been fantastic, that we've gone from 1 million now to 1.7 million ounces. We've done a lot of definition drilling, key results delivered outside of the current resource. You can see them there for yourself, but some stunning grades there. And drilling year to date has been focused on growth and determining the size of the mineralised system. Very exciting. So here it is. Here's the breakdown of a resource that we just announced today, based on the 45,000 metres of drilling that we have done. This is really exciting. So we've also got the JORC resource in that shallow, broad, banded iron formation. That BIF-hosted gold system, which is totaling 250,000 ounces at 3.7 grams per tonne. If that becomes optimised and can be under open pit, anything, that's a world-class 3.7 grams per tonne, world-class for open pit anywhere in the world. Remembering that a great deposit is usually one gram deposit. And we're 10. This is what we've been doing or what we're heading towards. So we've got the generative work. We've got a lot of outcropping veins. So on top of what you've seen, it sits outside of that 1.7 million ounces is rock chip samples in these outcropping veins of 145 grams per tonne, 6.2 grams per tonne, and 5.7 grams per tonne. And we will identify those areas and we will start drilling in those areas. Obviously, we've made a new discovery in the Carey zone, which is incredibly exciting, which is outside again our resource that we noted of 1.7 million ounces. And look at those, 20 metres at 5.3 grams, 13.8 metres, 2 grams, 16.5. It goes on. And we'll continue to step out and explore this near mine area and extend that resource. That movement from 1.7 million ounces to 2 million, we hope to announce sometime in the next few months, 6 months. Certainly, we'll put out a resource update on the 31st of December. Now you'll see here's our 3 areas that we've targeted. And you'll see up there on hole 152, 4.9 metres at 7.5 grams. You can see through here that all of these further structures and extensions, they underpin the year-end resource update that I talk about as at the 31st of December. And here's the Carey discovery. Open along strike, open at depth, and open almost in every direction. This is what's so exciting. These structures are really different, right? This is this testing of this first conceptual target, which has given us fruit already. So this style of mineralisation is different than when you'll see with the narrow vein to the vein-hosted gold that you currently have when we announce the 1 million ounces, and it's hosted in this sulfide-rich alteration halos. And nobody's really looked at these halos before, and that's what we've been doing with our team, and that's what's bearing fruit. And here again is the regional reconnaissance exploration. So I mentioned before we've got 500 square kilometres. This is a very small area outside of that target. And you can see the Springer shaft, which is to the south of us. But also what you can see is all of these F vein and all of these open areas open at along strike, which is very long. And some of these areas that we're looking at the moment have strike lengths of over 15 kilometres. So we've got a lot to go for. We are spoilt for choice here. And here you can see why I say we're spoilt for choice. What we've done is we've generated absolutely low-hanging fruit. We've drill tested that area. We've moved that into resource definition. Then we're going to move that into reserve definition, and then grade control, which leads to production. So long-term growth here, you can see that we'll continue the dual strategy of near mine resource, which with regional discoveries, all focused around exploration. Remember, this is an exploration play. The board has approved a further 50,000 metres of drilling. We've got 4 rigs turning as we speak, with a rig 5 and 6 on its way. And we continue to generate work through the mapping, surface sampling, geophysical data acquisition, and then the resource update. We expect that after this mid-year that we've just done, we'll update our resource as of the 31st of December. And then on our way to production, which we'll start doing scoping studies in 2022, next year. So in summary, you look at this story and you become a shareholder because of the location, which I mentioned to you. It's one of the best mining addresses in the world. The asset itself, it's delivered gold, continues to deliver gold, and will in the future. The upside is exceptional, right? The exploration that I've mentioned to you has been fabulous, and the drill results to date are great. A lot of those results I talked about are still outside the current 1.7 million ounces. And this team's done it before and will continue to do it. We have a balance sheet that can allow us to do this with a 50,000 metre drill campaign in progress with 4 rigs moving to 5 and 6. And with that, thank you for your attention.